The three strong signals of the relative volume for the bar colors are these three right here. You have the yellow, which is the churn bar, which is the highest volume per range of the past 16 bars. In this case, we're looking back 16 for the strong signals and 7 for the weak signals. So this is the yellow bar, the churn bar, the highest volume per range of the past 16 bars. And then the next one is a strong climax churn bar. It's both a climax bar and a churn bar. So this bar is a little bit wider range than the previous bar. I think maybe by a tick or so. And when you multiply the range by the volume, this would be the highest volume times the range, which is the climax signal, of the past 16 bars. And it's also the highest volume per range, the volume divided by the range of the bar. So it's both a climax and a churn bar because it's higher than any volume times the range for the climax signal of the past 16 bars, and then higher than any of the previous 16 volume per range bars. Okay, so it's both a climax and a churn bar at the same time. And then the next bar is a climax bar because it's a wide-ranging bar and it's very high volume. And when you multiply the range of the bar by the volume, the relative volume, this would be the largest volume times the range of the bar. Okay, that would be the largest bar, which is why it's colored deep sky blue as a climax bar. In this case, and you would have read that just above in the document, this is at the start of a new move. So this is really your first reversal bar back up. So it's not a true climax per se because it's not at the end of a move. If it were at the end of a move, then it would be better classified as a bind climax. This happens to be at the start of a new move, and it just happens to be that it's the highest volume, relative volume, times the range of the past 16 bars. So this is indicating the start of a new trend. Anytime you have one of these climax bars, as a reversal bar, after the end of a move, in this case a down move, this would indicate the potential for a new trend because you have increased buying, increased volume on that reversal bar, and then it goes up. Here, you have another climax bar, and this time you're actually breaking above a previous little swing high right here. So it's running some stops. It's not the end of a move, but you are running some stops, and then you can see the selling comes back in and pushes it down as it closes near the midpoint of the bar. Essentially just a lot of contracts changing hands. You're running some stops there. It pulls back a little bit, and then it continues upward. The next bars really don't have any kind of signal. It's just showing you the color, and it's painting the outline of the bar in this case because we're using candlesticks. So the relative volume is painting the outline of the candle. So when there's decreased relative volume, it will paint the outline of the candle red. You can see this is decreased relative volume. When it's increased relative volume, it will paint the outline of the candle green. So as you're trading, as you're watching these bars develop, you need to constantly be reading bar by bar by bar with the relative volume. Sometimes you'll get a signal as far as the different degrees of spikes. As you've just read, this is a minor spike. This triangle is a major spike, and then these diamonds are the extreme spikes. And obviously this one is extremely large as that's at the open, but this is an abnormally large open because we're comparing that 830 bar to the previous day's 830 bar. So this is actually 500%. Okay, so it's 5 times greater than the previous several days opening bar. Okay, so here, this was, a climax bar, but it's also a major spike in the volume. Okay, when you get up here into this high, you have a weak climax bar, and it's weak because we have the strong climax bar here, but then this bar has the highest volume times the range of the past 7 bars. And there would need to be a strong climax bar within the past 16 to compare the weak climax bar to. Okay, so the weak is always being compared to the strong climax bar within the look back period, which is 16 bars in this case. Alright, so here we have a weak climax into this high. It's also a minor spike, closes on the high, and then we get a little retracement here. As it starts to come back up, we don't really run into resistance until this bar right here, which is a churn bar, the highest volume per range of the past 16 bars. Okay, but you can see it's only just maybe a third larger than the previous bar. It's just slightly above 100%. So it's about normal volume for that bar, but relative to the past, say, 8 or 9 bars, it's fairly high volume, but it's higher volume per range because the range of that bar is so narrow. So you're running into some resistance there. It just pulls back a little bit, and then we get increased volume on the next bar as it turns back up and the buying starts to increase. Now once we break this high, we're obviously running some stops. We start to run a couple stops right in here, only one tick above that high. When it gets a few ticks above that high, then we start running some more stops and it kind of knocks it sideways. So this is again a climax churn bar, relatively high volume compared to the previous 10 bars, so it's also a minor spike. And then it gets knocked sideways. Then you have a churn bar here as you run into some support. That gets taken out and it comes down a little bit more. Now, the reversal bar, which is right here, as this bar is closing above the previous bar's close, you've been coming down for a few bars, and then you get the reversal bar on increased volume here, which is a weak climax churn bar. And that's being compared to this climax churn bar. Because this is your strong climax churn, then this is your weak climax churn, and then it turns back up. You have another weak climax churn bar here, which is just slightly greater relative volume than this bar. Okay, then the buying starts coming in. That's also a minor spike, indicating that support is now coming in, and then the next bar here is a climax bar at the start of this move. It really only goes up for a few bars. You can see that these bars are closing off of the highs around the midpoint of the bar, indicating that there is some selling pressure coming in. Then you get a reversal bar here, and it starts to come down a little bit. Now once you come down here, you get another little weak climax bar, which is blue, which is also a minor spike. You've got a little bit of support coming in. The next bar is an up bar. It continues down though, and then once it breaks this low back here, then you have the buying coming back in. As you're running these stops, buying pressure starts to come back in, and this is closing well up past the midpoint of the bar, near the high of the bar. This is also a climax churn bar in magenta, and also an extreme spike in relative volume. And then as it turns back up, you get a flood of volume come in at the open, which is 8:30 Central, and the buying pressure ensues. It kind of knocks it sideways a little bit, and then as you start coming up, you get a weak climax churn bar here. Okay, which closes off of the highs around the midpoint of the bar, indicating that there is some selling pressure coming in, some resistance. Comes back down, you get a minor spike here at the low, and then it turns back up. Once you come back up and you break this high, you get another minor spike here with that blue X, which is right there, indicating that you are running into some resistance. That resistance continues on as you have a churn bar here, very high volume per range, indicating that you are, as you're coming up into the high, you are coming into some resistance. It slows down. You can't get too high above that high, and then it rolls over. And then you get a weak selling climax here, this bar, as we come back and start to test this corrective pattern here. And then as we approach the VWAP of this move, I don't want to get too much into that, but this is another volume technique or method. As we come back into the VWAP, as you approach it, the demand starts to come in. We have the weak selling climax, kind of goes sideways for about 5 or 10 minutes, and then once it comes down into the VWAP, into this prior extreme spike support line, which is that green line. Let me erase this. We find some support. So at every extreme spike, there is, if it's an extreme spike at a high, there will be that green line that is run from the high of the bar, and then at a low, there will be a red line run from the low of the bar. You could mark both the high and the low of the bar if you wish. the main purpose for this is to find those kind of volume divergence patterns, and we do have volume divergence between these two highs, between these two highs, and then between all three of them. But at this low, you can see that it's closing up off of the low. You have a weak churn bar, which is being compared to this bar, this yellow churn bar. So this is slightly less churn here than we had at the high. Okay, so at the high, you're coming into resistance. Supply is coming in, it gets pushed down. Once you come back into this bar's high, into this corrective pattern where you had a lot of volume change hands, and you come back to the VWAP of this move, you have some support come in, it then works its way back up, and then once you come back into, essentially once you come back into this churn bar, you start to find some more resistance where we previously had resistance and the supply came in. More supply comes in, you have the minor spike in volume, relative volume, which is also a churn bar. It closes on its low, and then the volume really comes in, the selling starts to come in as we start the next down move, and then you can see this is labeled as a climax bar. It's really the start of a new downtrend, and then it goes down. Okay, and then we finally end this swing here on a churn bar, which is an even larger relative volume per range than the previous churn bar, even though the relative volume is not quite as high. When you divide the relative volume by the range of the bar, this would be a stronger churn bar. So the relative volume per range would be a little bit higher than the previous churn bar's relative volume per range. And then you can see you find support on that swing low right here, where we had the last extreme spike at a low. And then that red line is run from the low of that bar. We find some support there. It's also a minor spike in relative volume, and then it turns up for several bars and then starts a new uptrend. And then here we have slightly increased relative volume times the range, which is a weak churn bar, and then that kicks off the next drive to this high up here. Okay, so that just about does it for this video. I wanted to show you the relative volume by itself. When we get into the relative density, which is just a way of looking at the degree of churn or the degree of the relative volume per range, it's a completely different algorithm, and I'll explain that in that relative density video. But the way that we use it in the room is we actually overlay the relative density kind of behind the relative volume. So you'll see here, I'll just give you a glimpse into it right now. I use 15 days back for the 5-minute chart, and what I do is I set the relative density to a different set of colors. Churn bar is spring green. I set these to black. The low density bar I set to silver or gray, and then the extreme churn I believe I set to orchid or hot pink. Let's just use orchid, and then I make it about 7 thick for the width, and then I merely plot that on the same panel as the relative volume, and it will plot behind the relative volume. So then the relative volume is on top, the relative density is behind, and the relative density will color the inside of the bar, the body of the candle, and then the relative volume will color the outline of the candle and the wick. Okay, and it's the relative density that gives us a look into the degree of churn, and we'll cover that in the next video.